Hi, I am Mahesh Patil, the CIO of Aditya Birla Sun Life AMC Limited. I've been with the company since 2005, and during this period I've seen various ups and downs in the market, including the global financial crisis. And over a period of time, we have been able to articulate and finalize our philosophy, and the investment style has evolved over a period of time. Essentially, what we are looking at is to buy good businesses. What do we mean by good businesses? Is companies which are growing at a rate faster than the industry average, essentially trying to gain market share. Companies which have a kind of a significant moat or a competitive advantage. The competitive advantage could come in either from cost efficiencies, it can either be a technology advantage or a distribution franchise or a strong brand. Normally, we look at least 15% return on capital employed. Besides the business, management quality is also an important factor, which drives our investment philosophy. Over a period of time, it has assumed a larger significance. Also, management which is making the right capital allocation decisions and ensuring that every incremental capital which is employed generates a reasonable return on capital. And finally, managements which are taking the interests of the minority shareholders. But valuations would be the last thing which we will look at after all the other items are checked. I personally believe that it's important to look at the benchmark, because I think increasingly the challenges the fund manager and the industry is facing is beating the benchmark. If I have to articulate my investment style, I would summarize it as growth at a reasonable price, which is also called GAR. That's also a broad philosophy or style which, as a fund house, we generally follow. What it means is that essentially looking at companies which are growing at a much faster rate than the industry average, and trying to see that we are buying them the right price. Now, what is the right price is very difficult, because especially in the Indian context, where growth normally gets a larger premium, because what we've seen is that over a longer term, growth companies tend to do much better than the broader market. Over a period of time, I've been able to really modify the GAR philosophy to blend in the narrative of a particular stock. And the narratives could be either the company is in a business where there is a large opportunity, it could be a visionary management, and it could either be a turnaround story. Just to give an example, if a company is in an industry which has a large addressable market, then there is a big runway of growth over a long period of time. And in that scenario, we are willing to pay a slightly higher premium in terms of valuation. So I think with these changes, we have been able to find more opportunities to invest over a period of time. Besides that, I would say in terms of the overall investment style, normally have a good blend of top-down and bottom-up approach. Traditionally, we have been a bottom-up stock picker, that's been our strength. But over a period of time, we have blended that with our top-down approach, essentially the macro research, which helps us to take calls at the sector level or even asset allocation decision. And that has enabled us to get slightly more consistency in our performance across the market cycles. While the predominant style is growth at a reasonable price, but in the portfolio, I would like to normally have a good blend of growth stocks, value stocks, quality stocks, and cyclical stocks. At times, we also look at contra bets, because that's where the biggest upside comes in. And I think we are willing to wait for those moments when we see deep value in a particular stock. And then when we see some triggers, I think that's the time we would look to buy some of the contra ideas in the portfolio. I tend to normally prefer to have a slightly diversified portfolio. So you would see a slightly larger number of stocks than what you would see traditionally. And the reason for that is that if I like a company which is good and has a good potential, I'm willing to buy in the portfolio even if it's a small quantity, because of liquidity reasons one is not able to scale up. And that diversification normally tends to help to ensure that there are enough winners in the portfolio. For me, risk management is also equally important, because that ensures the consistency in performance. and especially at times when your strategy or your style is not working in line with the market. And for me, risk management is essentially looking at the benchmark and seeing the deviations what I would like to take at the stock level or at the sector level, and try to keep that within a particular desirable range. Another part of risk management is to really look at the drags in the portfolio and the stocks which are pulling it down, because these are the stocks which not only detract performance, but also it's an opportunity cost for new stocks to come in the portfolio. So constantly reviewing the underperformers and questioning whether they need to be there in the portfolio is also an important part of the risk management process, which one would follow. As a style, normally I prefer, when there is stress in the market, when there is panic in the market, because that's a time when one is able to buy good businesses, good quality businesses. Over a period of time, since I've been managing this fund, there have been a lot of learnings which have been there, and some of these are trying to hold on to your winners longer, right? What I've seen is that good businesses and good companies tend to compound continuously, and even if there are periods of slight underperformance, if one is able to hold on to the winners, then over a long period of time one can get large compounders in the portfolio, because it is not often that you are able to identify a great company. At the same time, I think it's important to also rebalance the portfolio, either at the stock level or the sector level, to ensure that the concentration in a particular stock is not beyond the thresholds which one has set in. I think constantly reviewing the underperformance in the portfolio and questioning them is also equally important, to weed out the losers in the portfolio and creating space for more winners in the portfolio. As a philosophy, I would like to ensure that the fund which I manage, there's a consistency in performance across market cycles. Normally, I will calibrate my active weights at the sector and the stock level, and I think from an investor perspective also it's useful, because investors come into the market at various points in time.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.